What up? What up?
Welcome, everybody. How we doing? Bert Peanut in here first. I think that.
He beat me. I'm kind of pissed.
What'd you say to me, Crash?
Said he beat me. I'm kind of pissed.
Dude, Bert Peanut's the OG, if you didn't know. That's my day one from OT right there, dude.
I got a really, really good question for you, and it pertains to our topic.
Oh, yeah? What do you got?
I gotta wait till Avenger's in here because I was talking with Avenger about it today. We're just for clarification on. Oh yeah, you see that thing?
Yeah. What's up with that?
Um, uh, I don't
Yeah.
know. I can't find any news on it. Um,
After hours, 10% pop for no reason.
yeah, I honestly I don't know. And honestly, it's one of my stocks that I watch the least of.
Yeah.
So I don't know.
Yeah, you just own it.
It's all noise. It's all noise to me at this point, you
Yeah.
know?
That's what it has to be
Yeah.
when you're a shit stock owner at the when you get into shit stocks at the ground floor, you know?
When you're the number one shit stock owner, yeah. Yeah. It's kind of what you gotta
You and MMA were cracking me up today, dude. I
do.
love the shit sucks. They had a satellite breakthrough.
Is that what? I don't know. I mean, we
Yeah.
know this. I don't know why.
It's only up 370% over the last year. Dude, you would have won that fucking stock thing that MMA had so easily.
I know. I know.
Too bad everybody was just telling him to buy AMC and GME instead.
And PLTR.
And PLTR. Dude,
Anyway,
he loves to talk about all my PLTR hate, and I was so bearish. Let's see. We can go back and look at it. You can like literally see where PLTR changed your entire business model. I was a mega bear this whole time, this whole time, this whole time. Then it finally starts popping. You can see. Let's all get PLTR. Here's where they became an AI company. Like this is entire business model changing and becoming an AI company. Even I quit short in PLTR then. They were hey, screaming AI every single day. So then you quit short. ASTS though, this one will always haunt me. Look at where we wanted, where I wanted to buy. That one's wild.
I was telling the whole world, whoever would listen.
Yeah, this one haunts me too. We could have had these at 60. That would have been nice.
Yeah, we never catch that thing.
I never do. I did. I caught one of these bounces one time and then like took pennies on it.
Classic, classic.
What about GME? We had like a stock. We had a MMA did a pick a stock thing, but unfortunately nobody took it serious other than Crash. And then everybody just recommended AMC and GME. Okay, welcome everybody. We're gonna give it a couple extra seconds. I was a little late getting it posted today, and then we'll get into it.
Can I ask a question on the topic right off the
Yeah, of
bat? I
course.
was talking with Avenger today about the opening range
Uh-huh.
and like the statistics about it.
Yeah, we're gonna talk it later today.
All right, uh I might wait then. Maybe I'll ask it then.
Well, you can ask now, and I can tell you if I'm gonna answer it or not.
Well, so obviously we know the structure. First
Uh-huh.
hour and a half of the day, the high and the low, that's your opening range.
Yes.
And whatever the statistic is, 80% or whatever.
Yep. 80% chance high or low of day has been set.
So it's the high or the low.
Yeah.
It's both, okay.
And so it's technically speaking, it's 90% chance. But
Yeah.
when these statistics were done originally, the market was a little bit different. And so a lot of people, myself included, really will tell you 80 to 90% chance low or high of day has been set.
Okay.
But you of course don't know. You don't know. But then we
So is
start then we start coupling that with some other statistics, and that's how we trade it.
but is it safe to say that let's just say the statistic is 80% now. Is it
Uh-huh.
safe to say that you technically don't get that statistical advantage one way or another until the high or the low has been broken? So like
Uh,
say day was like a perfect day, we had our high set, but then like 20 minutes later we broke through it. So is it safe to say that you don't get you don't get
well,
the
so
advantage
this
come
is
down to
the
lows?
this is actually a funny day in the opening range. Statistic
Yeah,
was
'cause
wrong.
blown out. Yeah.
This is one of those days where today the statistic was wrong. Not only was this not the high of day, this was also not the low of day. We set new highs and we set new lows. So it's one of those days where, 80%, 90% is not 100%. I said that yesterday, in a different conversation, but 80%, 90% is not 100%. And that's what people always need to remember. But and we're going to get into more of this later. We're going to talk about this, and we can even get rid of like all this other stuff for now. Oops, I think I just got rid of the opening range. I did just get rid of the opening range. Give me 1 second. That one, and that one, and that one, and I'll get rid of that one too. So today, opening range, what we do and trades we take all the time are we assume this won't break. Here's our high. Opening range is set. So we assume this won't break because, again, 80% of breakouts fail. So here's your short. Here's your double top short. Worked, it worked great. Nice little scalp to the downside. However, you get to run your nice tight stop, but you take this short because there's a very high probability the breakout is not going to come, and so you take this short. Then, funny enough, um, when this breakout comes, you don't necessarily look for a continued breakout. But what you do know is that when the breakout comes, you now have, and this is hilarious because the day disrespected statistics all over, you now have a 90% chance that the market will either range near the highs or trend to the upside. One of those two is going to happen once this breakout comes. And ultimately, what we got was a very long range that turned into a breakdown to new lows. That's statistically uncommon, but we got our push up, we had our breakout. At this point, we start assuming we should be looking for dips to buy, to trade to the upside and look for either ranged movement or ranged movement to the upside. That's what the opening range tells us. However, we know as soon as this breaks down, we should very obviously be looking for the double bottom down there at the opening range low. And then ultimately, if we break out, we can still use our statistic and say, okay, we've broken out this way. We're now looking for a downtrend to a range or a range to a downtrend down here. And ultimately, you got a little bit, but really, you just got range after the fact. Okay, but with that, welcome everybody. I'm sure there'll be a lot of questions on that. We'll be talking it a little bit later today. Uh, no, T-Money, funny enough, and we'll talk that. Ask that question if I don't. Ask that question again later if I don't answer. Basically, the second half of this is going to be a lot of the stuff that we like, stuff like that. We're going to be discussing patterns. We're going to be discussing all that kind of stuff. Beginning, and again, okay, welcome everybody. Happy to have you here. Did I send another? I didn't send. Give me 1 second. We'll get another one sent. Um, okay. Let me take a drink of water. I'm just getting home. Okay, welcome everybody. Happy to have you here, Dirty River, tonight. Probably going to be a small class. Let's be real, you talk math and people go running the other way. But today, slightly different class than we normally do. We're of course, as always, going to bring everything we can back to the charts, but we're going to be discussing some math of the market. The beginning part, it doesn't so much pertain to trading. Actual trading things. Of course, you know, it does all always come back to trading. But in the beginning, we're going to be talking a little bit more about, portfolio management, things like that. I'm going to show you some, things that I always like to show people. And they're gonna, it's, it's likely a little bit boring. I'll just come right out and say it. But they're things that everybody needs to think about. And they're things that everybody needs to think about. And generally speaking, nobody actually thinks about them. And so, like I said, and I kind of mentioned in my post, we're going to be talking, starting this off, we're going to be talking things like, risk reward. We're going to be talking about risk reward. We're going to talk about position sizing for your, specific portfolio size. And then, you know, what compounding gains are, which I think is a very important thing. Nobody really, talks about it much. And then after that, because we're doing math, then we're going to roll into some math that are some statistics that actually work for the market. And so again, with that, happy to have you all here. We'll get this rolling right away. So what we're initially going to start with is analyzing risk reward. All the gurus out there, they got their little like, green zones for their targets and their red zones for their stop loss and stuff. I don't know. I don't like any of that type of charting, people put, I think that people need to analyze their risk reward before they take a trade. Oh, let me make sure I'm on give me one second. Um, I think that people need to analyze the risk reward before they take a trade, but they don't need to let the risk reward dictate whether or not they take that trade. We can all say, oh, I do one risk, two reward trades all day, every day. I won't take it if that doesn't present itself. Well, that's fine. But you're going to miss out on a lot of opportunity in the market. There's times and places where taking that, what your original plan, one risk, one reward trade, it can be worth it and it can turn into a very, very good trade. And that's where I think people really mess up on how they analyze risk reward. They get so hung up in it. They try to make it really difficult. And in reality, it's super easy. I know that I'm a little different than a lot of people. I love to look at option Greeks. I love, I like that side of trading. I'm not saying you have to go really nerd out on them, but there are a couple Greeks, especially if you are a scalper or day trader, that I do think you really need to be aware of. I know that Toasty did Greeks this week, so I was kind of happy that I was going to be doing this class after it. Hopefully, some of you guys, at least I think Toasty did. Hopefully, some of you guys attending Toasty's class on it. But so the main Greek that I think people need to be familiar with, at least in my opinion, is, the simplest one, delta. You should be aware of what your delta is on a trade. And why do I say this? Because if you aren't aware of what your delta is, and then you have no idea how much money you could make or you could lose in this trade. So really quick, again, this isn't an options class or anything like that, or sorry, a Greeks class or anything like that. But what Delta tells you is if the stock moves $1, then how much money will you make or lose? There's a very common misconception, people, we see them on trade floor all the time, you know, something that people need to grasp that it is very hard for them to grasp when they first begin trading is that the prices of options do not move the price of stock. The orders and options do not move the price of the actual equity. Is there times where some big money person places a gigantic order, the market notices it, and it pumps or dumps a little bit because it sees that order? Sure. But that's not the normal. What moves an option price is the price of the stock. And so that's why I say, generally speaking, Delta, if you are a day trader or a scalper, is the main one you need to worry about. I see somebody mentioning Theta, Theta punching air right now. Theta burned, that terminology, that is every retail trader's favorite excuse for taking an absolute shit entry. If your entry is bad, then yeah, you're gonna get chopped sideways and you're never gonna see profit and or you might see just a little bit and then you're gonna go back to red, but you really aren't losing that much money to Theta. The thing about Theta that, nobody talks about is it's a rate of change. So, as Theta, your contract's at, we'll say $13 Theta. Well, that means in a 24-hour period, if the stock went absolutely nowhere, your contract's going to lose 13 bucks. So basically, I'm rounding down a little bit, but that means you're losing 50 cents of value an hour. You aren't getting theta burned. You took a bad entry. However, delta is what dictates how much money will we make and how much money will we lose. And so that is where I think it is important to start doing some risk reward analysis. And so SPY, it's making it easy for us today to give a little bit of an example here. This is a trade I took, and so I remembered it. Thinking of the market today and knowing that I had to do this class today, I wanted to be able to use a good example. So basically, we have our two little wicks right here. Um, from early in the day. And it just so happens to line up with 693. So this makes it super, super easy for us. We know that right around up here, 694, 694.20, the market has had a little bit of trouble here. So we want to we want to identify where we want to enter and where we want to exit. And so for me, this is the trade that I took today. I also, because I trade the opening range, I knew that we were about to set the opening range. I got lucky on this one. Don't get me wrong. Of course, didn't hold it all the way, but I got lucky on this one. Don't get me wrong. So we're setting a little bit of a double bottom in the market, and we aren't there yet. Say none of this has happened, and we're selling down to it. How do we analyze risk reward? Well, we we know where we want to enter. So before we enter, we can figure out about the price that these contracts are going to cost us. Well, we know if we're buying, we're going to call it 693.20, our stop's going to be under that 693. We're trying to get in there at 693.20, and our stop is going to be under 693. So we have a 20-cent risk. Well, how does this help us? And so I think I'm doing this correct. Let's see. Can you guys see that? Can you see the option chain I just dragged over? So right here, yes, you can. We have the option chain. Um, and ignore the strike price for now. We're just going to be looking at the delta here, and we're going to be pretending that those options line up with right here. So we're going to say, okay, I'm going to buy these SPY calls when we dip down to here. I know that they're $80. 82 bucks. And we know that we have 20 cents of risk. So remember how we were just discussing on Delta? It's all based on $1. So if we only are risking $20 or 20-cent move, that's 1/5 of a dollar. So when we look at our delta right here, we're just going to call it 40 bucks. And we know that we are only risking 1/5 of it. We know we are risking $8 on this contract. And just do that math quick in your head. If you got a 20-cent stop below you, you take 1/5 of your delta, which is 40 bucks, and we know we're risking $8. That is our risk per contract on this trade. That's likely too tight of a stop for the market we're in. We're ignoring those types of things right now. We're only discussing how to analyze risk reward. Well, we know that our main target, we're just going to call it 694. So we are risking 20 cents down for a 80-cent move up. So we get to go back to our delta and we get to again say, okay, we have 40 bucks in this, or we got 40 bucks worth of delta, but we're potentially going to make an 80-cent move to the upside. So that's 4/5 of a delta. So we are risking $8 to make $32. Does everybody understand that? Super simple. I want everybody to start doing this before every trade that you take. Because we're going to get into why this is important here in just a second. And hopefully I'm going to be able to find the thing I want to share with you guys before then. But does everybody understand this and understand what I'm saying here and why you need to understand this delta before you take any trade? Exact. Oh yeah, options chart is it's really great way to do it as well. I like to do it. I will look at the delta, but sometimes I won't even look at the delta. I'll just look at this and say, I'm risking 20 cents to make 80 cents. That's it. Make it that simple and just make sure that in most of your trades, you are, risking less than you are potentially making. That is the most important thing. You can really, really know how much money you are going to make or lose on this trade. And I personally think the much more important side is obviously the losing side. You need to know how much money you're actually risking on these trades. Otherwise, you're just shooting blind. But so does everybody understand how to do that? In a nice, like, does everybody understand what we're doing there? So how did I come up with the range? So I came up with this range. This isn't about technical analysis this time. Yeah, so this isn't about technical analysis this time. So we aren't really teaching, I'm not teaching you, I wouldn't necessarily, I mean, I did take this trade today. I love double bottoms. I'm a sucker for a double bottom, but double bottom was here, 693.20. Our stop was just under 693 and our target was 694. So we enter at 693.20. That's 80 cents to our target, or it's 20 cents to our stop out. That is going to be the easiest way to do this. We're, of course, discussing a SPY day trade. This is the exact same thing. Maybe you're dip buying a stock, maybe you're doing all these kinds of things. You still always need to have some of this in your plan. Of course, long-term investment, you view those shares and you treat those shares different, but anything you are treating as a trade, you need to make sure that uh you need to make sure that you are not always risking more than you're making. We see this in OT all the time, and we're going to get into this here pretty quick, where people, you know, people, they might hit 10 trades in a row and they're still losing money. The easiest way to think about it, what I tell people is, you hit two 20% trades, nice, good scalps, 20% is great. There's nothing against that. But then the stop loss on your next trade is minus 50%. Well, you hit two 20%ers. You now gave back all of that profit plus some. And your win rate's 66% and you're losing money. So that's why we start to analyze these things. So we don't end up in that same situation. Because your risk reward dictates what your win rate needs to be break even. So I just looked up a quick one. Let me make sure I agree with this. I just looked up oh yeah, so understand the math really quickly. Okay, so 693.20. That's where we're trying to enter. So I'll make this easy on us. 693.20. We're gonna go right here. Even though I said I don't like these, we're gonna edit it. And this is why, I've looked at charts so much. Here is your risk on the trade. And now if we draw another box up, we're targeting 694. Here is our potential reward on the trade. That's it. That's all we're trying to look at here. How much are we risking to how much are we potentially make? And you want to make sure that the risk is much smaller than the reward, any chance you can. So the really easy math on it is we're risking 20 cents of downside. 693.20 to 693 is 20 cents. 693.20 to 694 is 80 cents of upside. So that's when we that's when we can go to our delta and we can say, what's 1/5 of a delta? 20 cents is 1/5 of a dollar. I muted them. What's 1/5 of a dollar or $40? It's $8. What's 4/5? Because we're looking for 80 cents up. It's $32. And that's what you're going to make. So just do it quick. You don't need to, really stew over this. But you need to look at this trade and say, like, if you're only targeting 693, 40, well, your stop is 690, your stop 693, you're risking 20 cents, and you're only looking for a 20-cent bounce. You need to be right a lot of the time. And so that's where this comes in. I didn't double check this, but this is your risk reward, one risk, one reward. To be break even, you have to have a 50% win rate. To, be even, to actually start making money. If all of your trades are one-to-one risk rewards, you need to be right about 60% of the trade. Now you can see just from going one risk to reward, now you start to find profitability with a 40% win rate. And obviously, you'll start to see some of these higher ones, but one risk to reward is where most people should target because you never want to be the person that finds yourself in the situation where you're like, oh, my last 5 trades hit, and then I took an 80% loss and I gave it all back. Or you don't want to be the person that holds the runners or things like that end up just dead. You don't want to be that person. So that's going to lead us into our next thing we're talking about. And okay, unless people don't understand it, if you aren't getting risk reward, let me know. Seems like yeah, Frankenstein, you had a rough one today. Okay, so the next one we're gonna do, this one is just going to be a little bit simpler. It's just going to be typing out some numbers in front of you. And then we'll do one more thing on compounding gains after this. And then we'll actually get into talking about the market much more interesting. Okay, so I just want everybody to picture something. You buy a contract for $100, okay? And you get smoked. And now your contract is minus 50%. Out of nowhere, you're wrecked. You got $50 left in it, okay? Well, you're still holding it. So you're praying at this point. So I want to point something out to people, and I wanted to just do this visually for you. Okay. So if you buy $100 contract, you're probably looking for, your 20, 30, $40 gains, whatever it might be. That's fine. That's very reasonable. That's likely going to be a nice one risk to reward trade. Well, if your stop is too wide, you can ruin all of that. So, like I said, $100, your goal, it might have been $130 on that contract, perfectly reasonable trade, everything like that. Well, now that you're down to $50, you have to start thinking this way. How much and this is a question, all of you, so hopefully somebody will respond. For this $50 contract to go back to 100, how much does it have to go up? I know it seems simple, but I want you guys to think about it. Exactly. Avenger knows. I've probably yelled at him about it. 100%. Your contract needs to double in value to make you money. If you are only taking trades looking for 100% all the time, you are going to not last in the market. You have to think, you bought this $100 contract and you wanted it to go to 130. You wanted it to go to 140. Well, fine. Now that you have held this to minus $50, you actually have a one risk 0.75 return just to get you back to break even. So you need to be right 80% of the time if you trade like this. And you will never find profitability long term if you are always holding your contracts minus 50%. They have to go up 100% just to double. Anybody who is buying those contracts at $50 is more than likely selling most of them once they've doubled. So you have just really set yourself up for failure. You always need to think about these things. We saw it. If the person's in here, I apologize. I'm not trying to call you out, but we saw a screenshot the other day of somebody. On the day, their contract was up 800%, 875%, and the trade was minus 50%. So you imagine having a contract that runs 800% and you are still red 50% on the trade. And don't get me wrong, they held it like minus 99% and it came back to minus 50%, massive percent return, but not successful trading. So that's what I really wanted to teach all of you here tonight about analyze your risk reward and think about it. And these are the two parts of risk reward. If you are setting up a trade, one risk, two reward, if if part of your plan is to go minus 50%, well, your contract now needs to double to get you to break even. And then your contract from there needs to go up another 50% just to get you to a true one risk, one reward. If you go minus 50%, positive 50% is one risk reward. You needed a massive run to make it happen, but you need to start thinking about this. A lot of you guys hear me, and it happens to all of us. Don't get me wrong. We had some XLFs. They got wrecked by 50%. There was nothing we could do about it. That's just part of the game. I can talk about Shark. He's one of my good friends. Dude, he's on Netflix. The setup is too perfect to not be long, and bad news comes out every day. There are times and places where your trades are going to get wrecked, and it's just part of trading. Where the issue is, are all of your trades going deep red before you actually see some profit? That is an entry issue that you can work on. But always think about your risk reward. And you will start to find much more profitability in trading if you do. So does everybody get my risk reward, my little risk reward spiel here? Yes, yes, we're good. Yes. I don't need to save that. I know. And so yes, and I love that you're saying that you hear it a million times. Actually doing it is the hard part. I teach that all the time. Trading, it's super easy. Like people want to make it really difficult. They want to look for the next great indicator. Trading is super simple. What makes trading hard is people's trading psychology. You need to do the right thing at the right time and follow your rules. And people have a very hard thing where when you click sell, the money's gone. It's not coming back. You have lost that money. And a lot of people struggle with that because it's tough to just say that money is gone, but eventually you learn. Like I tell people all the time, sometimes it almost feels better when like say you take your 15% stop out or whatever, and then you look at that contract like an hour later and the thing's down 90% and you are so happy you took that stop out, and you know that there is somebody out there who held those things to that minus 90%, and you just get to be happy. And don't get me wrong, are we going to stop out of trades that go massively in our direction shortly after we sell? Yeah, I mean, for sure. I actually had it today on Apple. I shorted Apple and I sold right here at the opening range, around this opening range. Not 2 minutes later, those contracts were up an extra 100 and some odd percent. It happens. Like, that is just part of trading. But we just have to move on. We just have to move on. Yeah, and it's gonna happen. There's gonna be times and places where like, I mean, even today, like if we want to be technical, today on SPY, we took a stop out. Um, I think we might have shorted. Oh yeah, we shorted here. Um, I don't know, somewhere. No, maybe we shorted this one, this bounce up, and then we took the stop out. And well, I shorted again up here, but we took the stop out because we broke above our level. The buyers were too strong. We weren't going to stick in that thing. And ultimately, those contracts were down like 40%, 50%. But we took the stop, and I don't know, I think we lost $6 a contract. No big deal, no big deal. But and then ultimately they paid huge. But sometimes that's just going to be the way it goes. Yeah, unfortunately, they capped them capital losses. Mark to market's a lifesaver, but most people don't have that. Okay, so with that, everybody get risk reward. Everybody understand why we don't want to hold trades minus 50% because then our contracts need to go up 100% just to be break even. Are we all on the same page? Yes. Okay, so final one that we're going to talk about. This is something that I bring up to people, all the time. Nobody wants to hear it. So this is about position sizing. Um, and I understand that sometimes you have a smaller portfolio. You're gonna be over leveraged. If you're trying to trade with a couple few $100s, it is virtually, I can't say it's impossible, but you are hard pressed to find contracts that are worth buying that won't have a little too much money in your little too much money in any individual trade. And don't get me wrong, you guys know I push, and so does 1K, Bank of America, CCLs, American Airlines, all of those cheap names that do provide a good contract at a reasonable price. But let's be real here, if you only have a $300 portfolio and you're buying a $50, contract, $40 contract, you are over leveraged. My rule of thumb to people is that you want no more than 5% of your port in a trade. So if you got $1,000 port, it should be $50. And I know that sounds small, and I know that that sounds, like you don't want like you're never going to make money and you're going to fight all these things, and that's part of trading. The most important part of trading is time. The longer you watch charts, the better you are at them. The longer you buy and sell option contracts, the better you are at buying them. The longer you analyze financials, the better you are at using them. Time in the market is the most important thing that you can have. And the most crucial thing for the market is compounding gains. We see it all the time. I mean, and it's fine, but we got analysts in here that alert SPX. Go to a hedge fund, go to a family, hedge fund, go to a big hedge fund, sit down at your table and pull up SPX. You're going to get fired and you're going to get laughed out of the hedge fund. Nobody trades that. Nobody trades those kinds of risky things. There is no point. The power of the market is what happens over time. Look at Warren Buffett. $1,000 loan to what, fifth richest guy on the planet? That is time in the market. That is slow. That is being patient. And so, what I always like to tell people is think about compounding gains and think about position sizing. When we're thinking about position sizing, you know, you you need to always think small. Smaller is better, and do not underestimate what small gains can do. We've all seen Norvin being a moron on trade floor trying to call people out. He calls me out all the time, so I'll use me as the example. Oh, River made $12 on that contract. Well, yeah, the contract cost me $48 and I'm up 25%. 25% return is the same thing. It doesn't matter that the contracts cost $48. We need to think in position size. So what I try to tell people to do, and we'll prove this math, okay? So what I try to tell people to do is you get your port, and we're just going to talk about $1,000 port, okay? $1,000 port. So 5% in a trade. What does that mean? That means that you get to put $50 in each trade. And I know people think, oh, that's nothing, like how am I ever going to make money? I'll show you how you're going to make money. So you put $50 in a trade. You want to try to make, and this is what I always try to encourage newer traders to do, 5% in a trade, and you want to make 10% on that trade. And you want to do that 2 times a day. So, 10%, all that is $5. Think how easy it is to go out there and find yourself a trade that costs $50 and is going to pay you $5. I mean, the market dishes out hundreds of them a day. Anybody can do this. Well, you want to find 2 of them. So ultimately, your daily goal for your $1,000 port when you first start is going to be $10. And $10 doesn't sound like a lot, like people always think like, oh, that's not going to change my life. And you're absolutely right. It is not going to change your life. But what is $10 in relation to $1,000 portfolio? It's 1%. Does everybody get that? 1% of 1,000 is $10. Okay. So what does that do for you over a year? Because people don't understand compounding gains, they don't understand, compounding growth. And if you don't understand these two things, you do not understand the market and how you should analyze the market. So now we're going to come over here, calculator site. I assume they're good. Daily compounding interest. Okay. So we are going to put our port in here and we're just going to treat it the same. $1,000. And what is our interest rate? 1%. So we get to enter 1%. For how long? 1 year. Do we want to include all days of the week? Nope. Stock market's only open Monday, Tuesday, Wednesday, Thursday, Friday. So really this is working out to about 200, 250 days, give or take, of trading in the market. And I have to point out, before I show you this, so on day one, we need to make $10. Well, on day two, our portfolio is now $1,010. So we actually need to make $10.10. So every day it's going to get a little bit bigger. We don't care. Our 5% is our 5%. We don't care if we have $5,000 or we have $1,000. 5% goes into our trade. So we make our $10. The next day it's $10.10. Well, we do that for a whole year. And I want to point out, this is no YOLOing. This is perfectly reasonable position size. It's a perfectly reasonable thing to do. I will also say, there's going to be days where you lose money. There's going to be days where you make more than this. But if we can average it out to 1% a day, and keep in mind, this is $10 to start. At the end of the year, our portfolio value is going to be $13,290. We are going to increase our money by 1,230%. That is phenomenal returns. It is truly mind-blowing returns. Is it going to be a straight line? Are you going to be able to do this? Absolutely not. However, the S&P returns you 13% on average. You're only beating that by, 100 times. What more do you need? Everybody views this in get rich quick mindset. It is the worst thing to do, and don't get me wrong, on day one, you need to make, whatever it is, you need to make $10. Well, once you're up to 12,000, you need to make $122. I know that sounds like a lot more, but if you do the same thing and you do your 5% trade and you make your 10% and you do that twice every single day, that is how you will end up dramatically increasing the value of your portfolio in a very, very, very safe way. Yeah, right on, man. Thank you for being here. I appreciate it. It it's this is real trading. When I see the people in the gains tab and oh, my port's up 40% in a day. Good for you. Like, awesome. Like, I'm happy for you. You either have a small portfolio, and again, happy for you. None of this is I'm mad at you or anything like that. You either have a small portfolio or got super lucky on a trade, which happens. We've hit some lucky trades lately ourselves. Or you were so over leveraged, that you made that much return. Real gains. And we see it all the time. You got your morons, your Norvins, your assholes on the trade floor. Sorry, pardon the language, but you got those terrible people on the trade floor. Always remember, this is for you. You are the only person that matters when it comes to trading. Don't get me wrong, you can DM me, you can DM 1K, we'll tell you nice trade, we'll talk trading, we'll do all of that stuff for you. But at the end of the day, who cares how much money you made? Your goal for trading should be more than yesterday. That's it. If you have $1 more than you had yesterday, congratulations. Like, you're beating the pack. Most people are losing money because they're putting in huge amounts of money and they aren't realizing what they have to do to make the money back. Because that's the other thing. We discussed earlier an option contract. It goes down 50%. How much do you have to make to be break even? 100%. Well, that is the same thing with your portfolio. Like, people will say, oh, lost 20% of my portfolio today. Well, Have fun making more than that just to get back to break even. That is why you never leave yourself in that situation. You put your 50 bucks of your $1,000 portfolio in, and if you lose it, it's not the end of the world. Some news comes out, contract gets wrecked. It happens. It happens to all of us, but it's not the end of the world. Those people who got 20, 30, 40% of their money or of their port in a trade, they lose that. And it is very, very hard to make it back. You lose 50 bucks and you have $1,000 portfolio, that's fine. You can make it back tomorrow, the next day. You'll have it back by the end of the week, if not more. You have $1,000 portfolio and you lose 500 of it, it's going to be very hard to turn that 500 back into 1,000. It's going to be much easier to turn 950 back into 1,000. And so that is what you always need to consider when you are doing this. So again, does everybody get it? Everybody see why we think compounding gains, why we think of position sizes in percentages. We don't think in dollar amounts. It's why, people ask me, how many contracts do you have? It doesn't matter. Maybe you trade with more money than I do. Maybe you trade with less money than I do. How much I have in a trade should mean absolutely nothing to you. Like I am dead serious. There are people that take my trades all day, every single day. They're always in voice chat with me, and they are trading with 10 times the size that I am. There's also people that are in there that are buying one contract. They got a smaller port. They're just trying to grow it. They're trying to figure it out. None of that matters. All that matters is you are sizing correctly for your port and your risk tolerance on it. And so, I'm putting it out here and I'm saying 5%. Well, if you have $100,000 portfolio, I sure as hell hope you aren't putting 5% a trade. That's what we get asked all the time. When do I size up? Never. You size down, you know? Like if you can turn $1,000 into 13,290 only using 5% of the port, well, now you can bump it down a little bit. And you can do that again and again and again and again. And that's, everybody views the stock market as this, get rich quick, I'm going to retire next year. I want a Lambo. And those people don't last. Don't get me wrong, is beginner's luck a real thing in trading? Absolutely, same as the casino. But it will catch up to you. The slow and the steady is what changes everything. We can have these rookie people in here. They're going to be chasing their SPX. They're going to look up to the guy who trades SPX. They're going to ignore the fact that there's no way people are making money with the size of losses they take on SPX. So learn the market, learn what works for you, size down, and make your 1% a day. I mean, maybe, make your 1% a day. Maybe maybe we don't even need to look at a year. Your $1,000 portfolio, you made 20% on your money in 1 month of doing it. In 2 months, you 50%ed your port. Nobody cares green day, red day, none of that matters. A year from now, you aren't going to say, hey, Dirty River, remember when you got us stopped out on SPY puts on January 15th when the market dumped, 15 minutes later? You aren't going to remember that. You want to have green days. Then you want to have green weeks. Then you want to have green months. Then you want to have green years. None of this day-to-day stuff matters. Am I happy for these people that double their port in a day? Absolutely. I also know that they're going to lose it all like the next week. That's just the way it goes. We had a guy in here. He's been very open about it. I respect him. I hope he doesn't get offended by this, but he knows what he did. He ran his port 40 to 40,000 and then he lost 30,000 sports betting. You know, don't get ahead of yourself. Stay, always think big picture. If I make $100 today, I got $100 more to use tomorrow. And if I do it again, I got $200 more. I got $300 more. All you want to do is think in time. And that's what we see here. And 3 months we're 50% in it. Well, 4 months, all of a sudden, we're really going for it. And this thing is growing fast. 5 months, it is going for it. 6 months, we're starting to have a bigger port. I mean, we're up 200% on the year. 7 months, all of a sudden we're up, 350% on the year. And so always think you don't need to make it all today. You don't need to make it all tomorrow. You don't need to make it all next week. You need to say, how did I do year over year? I mean, this is, you can 459% your money in 8 months taking two 10% trades. So we've run way too long. We're not going to get into any trading statistics tonight. I apologize for that. Uh, but does everybody get what I'm saying here? Does everybody get what I'm trying to beat into your heads of, trade smart, trade safe. Don't get sucked into the trade for nonsense. Don't get sucked into people saying we're going higher, we're going lower, like none of that matters. Trade your port and consistently grow your gains. This is also, I got to give a shout out to 1K. I'm not sure if he's still in here. This is a big hint to all of you. Maybe you should quit trading your Teslas, your Nvidias, your Apples, your Amazon, your crazy movers. Maybe go check out 1K's tab. I tell people to trade his trades all the time. Trade your CCLs, trade your American Airlines, trade those cheap names, SoFi's, Bank of America's. Trade these cheaper names. You got $1,000 port. You're trying to make $10 on day one. Do you want to risk a $400, Tesla to do that? I sure hope not. However, I'd highly recommend you go risk a $40 CCL with 1K and make your $10 and move on with the day. Yeah, tea, Coca-Cola. Me and T are, yeah, I got issues with tea right now. Exact. Well, no, Scotty,
AMD?
uh,
Sheesh.
oh God, here we go. The king, the king of the people not to listen to. Yeah, I am so mad at T right now. We are, that thing's like we're not on speaking terms. I do think I should have bought it the other day again, but I thought I should buy it like here. I got wrecked. I thought I should buy it up here. Yeah, fuck T. I'm so mad at T right now. Yeah, Scotty, we're like not on speaking terms right now. Big believer in T-Mobile. No, I'm not. Yeah, they're just gonna sell it off. I agree. But okay, so does everybody get it? Any questions here? Go hit 1K's tab. Quit chasing your AMDs. Quit chasing your nonsense. Like shit stock, don't trade it. EOSE, who cares? Hood doesn't matter. None of those stocks should matter to you anymore. Think realistic. If anybody wants the link to that compound gains calculator, I'll send it to you. If anybody wants to talk about position sizing for their portfolios, anything like that, always feel free to DM me. I'm here to teach. I'm here to help you guys. Obviously, I alert a bunch of trades too. But I want everybody to succeed. That is what is like. You know, that is what is most important to me in OOT. I've always said it, education is and always will be my number one focus in here. I only alert in voice chat. Basically, I haven't alerted in the tab in over a year. We got enough alerts. We got enough of that going on. But take advantage of this and learn, OOT is as cheap as you're gonna find. You're paying $50 a month. Let's be real here. All of you are buying this thing on a sale. We got sales all the time. You're likely paying less than $50 a month. And there's a few of us in here that trade full time and take this serious and want to educate people and don't want you out there just chasing the next shit stock, all of that. We don't care. We don't care about any of those names. That's not how you have longevity in the market. That's how you build FOMO in the market. Don't get me wrong. You want to chuck some shares you want to chuck some shares on some dumb name, fine. Like I can't think of one right now. But fine, EOSC, why not? I mean, that one makes volatile news. You want to buy some shares of this thing? Great. Own a few shares of it. Don't trade options. Don't be some, true believer. Like you don't want to be that person. These aren't what you should be your money making. Everybody wants to catch the volatile explosion. We fumbled it. We bought here. We sold here. I sold on the second. Missed the whole thing. The move I wanted too. Missed the whole thing. Who cares? We're here to make our money and get out. Like I talk about it all the time. We are trading in the most advanced financial market on the planet. We are trading in the second most advanced division of that financial market. Outside of the bond market, there is not something more advanced than the options market. The options derivatives have so much push and pull going on. And we're a bunch of nobodies. We're trying to trade the most advanced things around. We're just trying to make it through. And we're trading against, or hopefully not against, because hedge funds are always right. You know, big hedge funds, billions of dollars, people getting paid tens of millions of dollars to work there, algos that cost $100 million to make. They're paying quants and theoretical mathematicians to manage those algos. And I'm just a dude in a house trying to make some money. We're never going to win. We're never going to control the market. We're never going to have this push and pull in the market. So we just want to get in. We want to trade things that make sense and get out with our money. That's all that matters to us. Nobody cares about your 1,000% gain. Nobody cares about shares that ran 1,000%. That you weren't even in. None of that matters. What matters is you show up, you analyze your risk reward, you size small or size according to your portfolio, you make your money, and you move on with your day. That should be everybody's goal as a trader. Don't get me wrong, I sit and trade all day long. This is my job. For most of you, it is not your job, and it is a side hustle. And that side hustle should be treated accordingly. Let's see, we got any questions in here? Yeah, sometimes you're right. Sometimes shit goes become real co's. Sometimes they do this and they go worthless. The life of a shitco, and all of a sudden you are what was a gigantic broadband company and you're trading at 1 penny. So you're right, but don't get married to those things. It's like the Cypher team. Everybody was mega bull on this thing at 18, and now they're wrecked because they lost it all. This one, everybody's mega bull. Then it dropped. I mean, I don't know what that drop is. Like everybody's super bull on this thing at like 36. Then it fell 70%. Don't fall in love with these things. This stuff doesn't matter. This isn't like when you talk to, and I am not one, but when you talk to a financial expert and you try to tell them, oh, I got a bunch of shares of Zeta, they're going to be like, well, I hope it's like 1% or less of your portfolio because that is extremely high risk. You should not have very much money in that. And that's real trading. Oh God, we got Northern requests. Yeah, what is this? No, I'm good. If you guys want an excellent example of something to not give a shit about, Norvin just showed up and flexed it. Here you go. Who cares? So when it comes to position sizing, yes, but I don't like how people trade leaps in here. I mean, MMA, some of those 2027s, they make sense, but like leaps are share replacements, and leaps and shares should really live in the same portfolio. Swings, day trade, scalps should all be in the option portfolio. And my swing position size will get a little bit bigger, but day trades and scalps are going to be they're going to be the same thing. But with swing trading, you got to leave some room to add. And you know, I know that a lot of people have to work and blah blah blah. Get in, take your 2 5% trades and get out. You're gonna make more money than the swing traders. I'm telling you right now, you will. You will. Like it's just the facts. Like swing trading's fun. You get to hit some home runs. You also have to stare at red. You have massive opportunity cost. Get in, get out, get on with your day. I can't recommend it enough. In my opinion, in order of things people should focus on, it should be day trades, it should be scalps, and then it should be swing trading. You want to roll some money into swing trades? Awesome. But you know, I just don't like how people swing trade, I guess is how I'll put it. Oh yeah, Viral, dude. I meant to message you the other day. That TEM was a ripper. I don't remember where we talked that, but it was right back here, 60 or whatever it was in the last couple of weeks. Ripper on that thing. I hadn't seen that knife actually. TR. Let's check it out. Yeah, I know, overall, but the math doesn't. And like like, and it's fine, but the math doesn't lie, you know. TR. Sick one. Yeah, dude. Did you bring this up? Did you like post this on Trade Floor or something the other day? Because dude, I just pulled up Tootsie Roll just the other day. Wow, look at that double top. That's sick. Somebody posted about this just the other day. And it was yeah. And I pulled it up. I had no idea this was a stock either. That's hilarious. And I will say, I know not everybody has the time to sit and like look at charts and all of that stuff, and like you can't sit there and trade all day. But, swing trading is just there's no way around it. Is the riskiest trading you can do. So that's why I recommend most people should stay away. If you got a good person to follow or you've developed your method, of course, all of that is, all of that is just fine. Uh But swing trading is disgustingly risky. Oh, CRM, what that one do? Oh, nice. Look at you can see where I said to buy it. This is from me and you. That thing went on a ripper from where we said buy. Look at that dump. Is cybersecurity getting wrecked? You're like my cybersecurity guy. Wow. But buy time, huh? Right off this 230. Yeah, that was money. Perfect little triple, even quad top. Beauty, beauty, beauty. Yeah, that one's perfect. Dude, this one's gonna haunt me for years. This, like, dude, we talked about this one every day just to watch it run. Oh, I actually have a hilarious one too. But yeah, you could go back and find my lecture from whatever the Thursday was around here where I'm saying, oh yeah, we should definitely be buying this thing. This one's hilarious though. Check out my MU trade. I bought Micron shares at 224.35, and then I sold them at 238 in the after hours the same day just for it to run $120. Yeah, that one hurts. Okay, well, everybody, if that's gonna do it, yeah, IBM was sick. IBM was sick. That was a good one. You got our eyes on that one. Can you check ASTS? Yeah, it's time to short it. To be honest. Yeah, it's time to short it.
Yo, River, can you check Pure Storage? PSTG?
Yeah, it's probably time to short ASTS. PSTG. Pure storage. Like storage facilities? I love storage facilities.
It falls into place with like SanDisk, Western Digital,
Uh,
MU. Yeah, it does the
it's
same
like
thing as that. Yeah. It's
it's
just a laggard. I really like it for this year.
it's on computer storage. I was hoping we were talking steel stud storage buildings. Yeah. Huh. You know what? It ain't bad. Didn't quite fill the gap. Don't like that. Whacked off the double top. I don't hate this chart, honestly, Norman. Damn,
The
Norman.
the next AMD trade?
I was just gonna say Norman came in with two all right ones. I mean, I'd buy this. I'd buy this at $69. And
This is actually better than Nivea's though, for real.
this one's sick, actually.
Yeesh! 100, here we go.
Yeah, but we need a little down. We want to buy down here. Let's get down in the 64 to 69 range, and we'll buy it. We'll buy it.
Let's go.
This one was good though. Look at, we even
Yeah.
got it. Because remember I told you we're gonna put it in there. Told Norman buy.
AMD was sick, bro.
Yeah, AMD was a sick one.
Even out the money ones were like, I think they went up like 3,000%, bro.
Bro, remember I told you, I said if we hit 200 is actually what I told you.
It was
Buy a 210 weekly. They were $150 and
it was the 227 call, bro. They
well,
went
yeah,
up
but
to
I told you buy a 210 weekly if we hit 200. They
Yeah,
were
follow it, bro.
$160 and they topped out at 28.45 or something.
Yeah, we literally bottom kicked that AMD, bro. That shit was nasty. But we'll find it. We'll find
Night,
another
Scotty.
one.
Have a good one. Yeah, Norman is 5 Celsius deep. Somebody just asked me for this one, JPM. I think. I don't see it now. What did I do? Oh, short ASTS. I'm sure that's what you're yelling about. Did somebody ask me about JPM or am I just completely making that up? Uh, Damn, we got Nando in here. Nando fucking, I didn't respond to him. He dipped out of a group chat with me. He's mad at me right now.
Damn.
Dude.
That though. I love you, bro.
Norman's gonna get banned soon.
Yeah, let's get it.
Oh yeah, there we go. JPM, please. So here's the thing with JPM. I'm bullish on JPM. Tilio and I were talking to people, leading in these banky Rs. You get a pop into the banky Rs, they oftentimes sell after it. Even if you don't get a pop into ER, you oftentimes see a little bit of selling after it. So I swung some XLF calls yesterday. I still like it. If I'm, you know, if I'm being more ornery, I want to see a reclaim at 310 in this little trend right here, or I want to buy it down here at 300 if we sell down to there. However, I think it's time. I think we got most of them out of the way. City was the one that they went on this rip. I mean, they ripped, and it was that nice strong day on the back of those earnings. That's what we wanted to see. So I think it's just about time to buy these XLFs again.
Yo, River, I called the top on financials or what?
No, well, yeah, you called the top on financials to long them. Yes, yes, dude. Norman's probably still fully long
Hey,
it,
I was wrong, bro. What can I say?
but we finally got our pullback. Yeah. Well, really, you were wrong for like wherever that was, wherever April was. You were wrong until like here. And then you started to be right. I mean, you were looking to buy those dips at 50-51 on XLF. That was perfectly reasonable. That really was.
Yo, financials, I honestly, the one that's actually been working for me has been USB. Those premiums are cheap and you don't get burned on the IV.
Yeah. Yeah, Capital One. This one's a dip buy. Doesn't it have some buyout thing going on? Yeah, I'd probably be long for that gap fill. That thing's gonna come soon.
Yeah, it's buying out I think a financial company.
How did I chart those fibs? I don't know what I had fibs on even. What we looked at a lot of things. Is it JPM?
Hey
Yo,
River,
River,
Josh here.
Oh yeah.
Let's
River, I
look
was
at
gonna ask you.
XLE, like just long-term picture,
Short.
a little zoom out.
Yeah, short. Short. No questions. This admin's horrible for energy. Like, and they were in the past. XLE, funny enough, strongest performing sector under Biden, which always cracks me up how, dude, for Dems pushing, solar and all that stuff so hard, the oil companies sure do well under them. But I mean, look at right here. Like you couldn't pay me to be long XLE. I think also all these rippers like Chevron, or Exxon, this thing coming back down. This Chevron staying down. We got like I don't know. Everybody's all balled up on oil, and I am so far from balled up on oil. I mean, like, this is the other thing that people have to consider. So, and it's hard to make one, like, every company is different, blah, blah, blah. Are they getting oil from the Permian Basin? Are they getting it from the Gulf? Where are they getting it from? 60 to 70 bucks a barrel is where big money's making money. That 70 to 80, 90s, they're making money on oil. Right now, these oil companies aren't happy. And these oil companies don't want to spend, and I've seen a million different numbers for the Venezuela thing, 200 to 500 billion dollars to rebuild their infrastructure. These companies don't want to do that. I mean, and don't get me wrong, you have like some of them, hitting all-time highs, things like that. They're coming back down. Drill baby drill is in fact not good for oil. I think you can trade it to the upside. Exxon, obviously, nice standout there. The one that I actually like, uh, oops, the one that I like is Valero. I mean, it is focused on refining. So Valero is the one you want to be at because Valero has the infrastructure to actually refine some of that heavy crude. Nobody else does. And then like I don't want to like uh I don't know how to I don't know how to say this without like, sounding biased or whatever. But like, everybody's talking about like, oh, Chevron already has stuff in Venezuela. Well, during that like interview thing where Trump brought in the oil execs the other day, he's talking to him and he's like, how much money did you guys lose there? And the guy's like, billions. And Trump laughs and says, oh, well, I'm sure you'll make it back somehow. But the part that he is forgetting is that the reason they lost billions was because they were basically forced out of Venezuela the last time Trump was president because he put on all kinds of sanctions and stuff. So Chevron had to leave and Chevron had to eat the multi-billion-dollar loss. And so Venezuela's got a bad taste in Chevron's mouth. So I am more bearish oil by the day, personally. Can't wait to be fucking dead wrong on it, But let's be real here. Oil companies, they want to be in the Permian Basin. They're sucking oil out of the ground at $40, $50 a barrel there. Excellent infrastructure in the US, very easy to get everything they need. They want Texas. That's, light sweet crude out of Texas, easy to pump, like that's what they want. I haven't really got into that. I hear it's a sick show, but I mean, the Permian Basin is the spot to be sucking oil out of Texas. And I know that's where that show is. And so, like, I mean, it's real. That's what they want. Easier to work on, more workers. You don't have to deal with all of the nonsense that's going on off the South American coast right there.
Wait,
And,
River, what's up?
how we doing?
So you're telling me we should OOT's heavy on Exxon shares actually.
Well, yeah, but aren't you guys in it from like down at 100 or something like that?
Yeah, the average is around like 106. I mean,
Yeah.
this is more long term. It's
Yeah.
not something I'm looking to scalp like maybe
Yeah.
names like Rivian, SoFi, but
Uh-huh. And like, don't get me wrong, are oil companies ever gonna go anywhere and like die? No, like obviously not. But I just look at this and if we are being technical until this week, Chevron has done absolutely nothing since 2022. And not to say that a $20 range on something isn't tradable. In fact, it's super tradable. It's super sick to trade. But until this big old breakout, Chevron was dead money, for shareholders. So I mean, you guys are up 30% on shares. I'd probably be taking a trim, that's just me. But my stance has been, and I mean, it worked for me in the first term. It's worked for me pretty good thus far this term. Short XLE. You get a big bounce on XLE of any kind, short it. And as we're starting to push up, I mean, they've done their reverse split now, but as they're starting to push up to these highs again, it kind of falls into that same category, obviously, as all those oil companies of it hasn't done anything.
Yo, River, I disagree with this. On XLE, 23% weightage of Exxon, and Exxon is getting good trades right now. They are maintaining their products so well, and I think for
Well, it's
next
tradable,
two
but look at
quarters, it's gonna help.
and it's plenty tradable, don't get me wrong, but you can't disagree with me. The chart did absolutely nothing for 3 years. Here it is. The company hasn't been, growing in spectacular fashions, massively increasing profits. Like it hasn't been doing that, hasn't been, increasing dividends, hasn't been decreasing dividends. But look at the chart.
How you see the 6 month target on this one, where it should be by technical chart or whatever you see the oil politics?
100, back down. I mean, trade the range until the range doesn't work. If we start breaking, I mean, don't get me wrong, 3 years of consolidation can give you a pretty mind-blowing breakout. Don't get me wrong. But if we run some fibs on it, these would be my upside targets because it's a 3-year long range. There's no other way to these should be your levels. And okay, I really slapped that on there super rough. You could do these
Right.
fibs
Yeah.
much more accurate than me. But these are the fibs that I would be looking for. You're pushing up to, I mean, I know, you guys like fibs more than I do. You start pushing up in these 61.8s, you want to start looking for pullbacks here. You don't want to be looking for continued explosion, especially on like you know, we're rallying because of Venezuela, and we're rallying because, the last couple of days because of maybe some like lessening tensions in Iran. Um,
Wait,
oil,
one other thing. My bad to interrupt, River.
no, you're great. You're great.
So like one thing with Exxon, day by day, I do realize one thing. Time flies. I've been in OT. I believe my first join up was like 2023 August time, so it's almost like
Yeah.
like almost 3 years. So a long time, and every time, majority of the members know that I'm a big fan of Exxon.
Yeah.
And I'm usually always mentioning the same thing, bro. This is not going anywhere. It always is the same thing from bouncing at 100, making a round trip right back to 120,
Yep.
125, and it always makes it down. Now, this time is a little bit different.
Yes.
I don't really want to like admit and say that it's because of the Venezuela stuff that Exxon is finally through 120 and finally like touched the 130s. But I think the least we can expect here is maybe like a retest through like all this resistance. But this time might it could be a little different. Maybe I'm too young
It
to like
could be.
understand or something.
No,
But
and I think you're exactly right. We have, and like I'm just like looking at this, I mean, we got buck 80 earnings per share, buck 60, buck 70, buck 60, buck 90, $2, $2, buck 90. It's consistent, I do think that you are 100% correct. This time is a little bit different. Big consolidation leads to big breakouts, and 3-year consolidation can lead to an absolute face ripper. And then you couple that in with some potential geopolitical stuff that could keep it moving. I think you're 100% right to say this time could be a little bit different. But I also know, me personally, and like you said, you guys are already in there and everything. Me personally, I wouldn't be chasing the strength. I would start to look for pullbacks. But let's see here, and I mean, when is this? 30th of this month. Let's see. Is this breakout going to be backed up by a change in earnings? Are we going to see a blowout earnings? Are they going to increase dividend or those kinds of things? Because I'm actually seeing that here. 99 cents to a buck 3 on a dividend. That's a decent increase. I mean, Nvidia's giving you 1 cent per share. And so, I mean, a 3-4 cent increase on a divvy is actually a big deal when you think about how many shares they have. So I do think that you're right. This one could be different. Let's see if the earnings are going to be the thing to keep it up, or do we see, continued sideways oil movement? I mean, it's just what we've seen for so long. And oil loves to do it. Um, you know, it will go through long periods where it's just in a zone, like all of this will happen, and then mayhem will happen, COVID will happen, obviously. But it's still just, I mean, XOM for years just lived life in that 70 to 90 range, all the way from 2016. Shit, you probably weren't even born in 2016, Nando, all the way until 2022 to finally get above that. And so maybe that's what we're seeing right now. 2022 all the way to 2026. Maybe it's time for these things to run. I actually like that, and I hadn't thought of it that way, and I love that you brought that up.
now listen, actually, something with Exxon, it's actually one of my favorite names to swing trade. I think it's very like I do like to swing names that move smoothly, not too wild, too volatile, where
Yep.
you're like you could
Yep.
barely like even get some good sleep because you're wondering where the price might open up.
Yep.
But I didn't really start touching this until like after 21, 22, and yeah, they done look at the price action they gave me, pretty much a
Yep.
range that who I never knew. But my main points earlier was I don't expect people to expect too much out of this one because it's really just been a round trip back and forth from 100
Uh-huh.
to 120, and I really don't know what's bound to happen here. I don't like getting ahead of myself and trying to be a genius to figure out what's going on with Trump and what he's doing, and pretty much give reason and on the
Yeah.
whole Venezuela thing on why this is going up. Because for me, it's literally just trading the chart. I'm glad that we bounce out of that lower 100
Yeah.
range because it was concerning. But looking at the chart, it seems like there's always there's always it's like there's always that catalyst down there
Oh,
to
yeah.
get this out of here. But it finally did it, and who knows
It-
what happens for here? Who really?
Dude, and it finally did it, and it finally did it on volume. Like they're hammering this thing, you know? I mean, we've put up like I don't remember, I heard him talking on CNBC, but it's like of the top 20 highest volume days on Chevron, we put up in the last 4 years. Some of them were in this last week and a half. So they're buying it. I mean, they're buying it. And you're exactly right to speculate on it. Like, to the oil market, I'll never understand it. I'll never be rich enough to know what the hell's actually going on with oil, you know? Like those guys are doing those guys are on a whole nother level than us. But I want to just touch on one other thing you said. I've always liked that you don't swing the insane ones. Well, sometimes you get a wild hair and you jump in Alibaba, you know, and that one's insane. But dude, you swing the things people should focus a lot more on swinging, you know. I've always liked that, you know. I've always liked that.
Yeah, actually to break down a little bit on that, it's for the swing for the ones that love swing trading or I think more in general, the ones that really don't have too much time to stare at the street the screens all day like I do. You want to dive into, the few sectors that we have in the market and test the waters, and I think after a year, 2, 3 years, you'll find your little like favorites in this sector. Like for example, Bank of America for me is it's one of my favorite bank names to trade, and I try to just focus on that one.
Yep.
Trading
Yep.
related. Exxon is the other name. A lot of people love Oxy and like
Yep.
MPC. This is my one. Exxon. There's a lot of China names as well, and you guys can see like how like one could be like my bread and butter compared to like another name for somebody else in the same like sector or whatnot. But I've kind of uh like filtered out my own little list of like names that I do like to swing trade, and yeah,
Yeah.
this is one of them. Exxon. Hopefully, it continues going up, but
Yeah,
it's
I
not a
hope it,
promise.
I mean, I hope that thing hits 200 for you, you know, don't get me wrong. And dude, it is a fun one because who the hell knows what's going to happen? You know, this is, like you said, we can't pin down, we aren't cool enough, we aren't important enough to know what's really going on behind the scenes. So you just got to run that chart. And I'll tell you, I mean, that chart looks like it wants to go. My personal bias is to downside, you know, but like, if I look at that chart and I pretend it's not Exxon, this is a 3 year breakout in the making.
You agree, but it will do like Intel. A long time it just waited and waited, and now the oil sector will get good
Uh,
bounce, and this will be ripping all the way.
Yep, and it very well could. And I like that. Yeah, and thanks for making me look at it the other way, Nanda. I love that. You know, I love when somebody's got a different view, and I get to sit for a second and think like, wow, you could be right too. That's the great thing about the stock market, man. We can all see a million different things, and we can all still be somehow right. You know, I love that part.
Well, with this trading stuff, it's like this kind of goes back to Norvin. I'll make a little joke here. It's like, Norvin will mention something, he'll be wrong for like the first 10, 11 months in the year, be right on
Yeah,
the month of December, and then he can brag about it and say, "Hey, look,
yeah,
I told you so." Like this is bound to happen.
yeah. Dude, and that's even SMCI. I forgot that they split, you know. But this is where we told Norman to buy SMCI at the time. It was much, you know, it was cheap, and then it ran to $1,200. But we weren't part of that, you know. And this was where the buy was, and not a whole lot, not a whole lot, not a whole lot for 8 months, and then the moon.
Yeah, the entire like SMCI stuff was
Yeah.
maybe like a few months before I joined the Discord, but
Oh, dude, it was yeah. And then there was even one. Let's find. God, I wonder if I still have the. Dang, I don't. But dude, the day where I told Norvin, I think it was probably this day as I look at this. Yeah, it was probably this day. I told Norvin, don't long SMCI. And then he did, and it clobbered all day long. And then they did the surprise earnings release, and it ripped 50% by the next day, and his contracts would have been up like 8,000%, but he stopped out for minus 80%. That was my bad. Okay, well, everybody, I got to call it. Ran a little late tonight. Thank you all so much for being here, and we'll be back on them tomorrow. I'm sure Nando will be holding down VC. I'll be holding down VC. Let's have a good Friday, and thank you, everybody. This is a very enjoyable class. Thank you all.
Later, River. Good night.
Yep. Everybody have a good night. We'll talk to you all soon. Thank you.
Take care, fellas.
You too, Nanda.